Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us at the market site in Times Square, New York City, we have Mike Mullaney. He's the Director of Global Markets Research over at Boston Partners. We're going to take a look at 5 factors to watch for 2020. Mike, it's great to have you with us at Market Site. And the first one, strength in services versus manufacturing.
Right. I think everyone knows we've been more or less in a global manufacturing recession, even though we are starting to see some signs of improvement there. Services, though, has been very strong. So services remain about that 50 demarcation line where it's been expanding, for quite some time. And if you look at a composite between manufacturing plus services together, you'll see that that's bottoming as well, and that usually portends that we're going to see a pickup in GDP growth both in the United States and on a global basis going forward.
All right, and monetary and fiscal stimulus that has certainly been accommodated for 2019. Do you expect that to continue?
Yeah, we've got 3 phases of that actually happening right now. So if you look at monetary stimulus, you've got your plain vanilla, they're cutting interest rates again. Rates are back down. The Fed has been accommodative in 2019 with 3 cuts. And that's happening on a global basis right now. You've got 60% of central banks right now are cutting rates around the world. So we've got some monetary stimulus coming from lower rates. On top of that, we do think that the Fed is doing QE again, even though Chairman Powell is not calling it QE. We think that increasing the balance sheet provides liquidity to the markets, and as such, we've got that aspect of monetary policy happening as well. And fiscal is starting to kick in. We know that our fiscal balance is going to go deeper into the red in 2020. That's fiscal stimulus, and we see that happening both in the United States and on a global basis as well. So we've got some winds at our back again from a stimulus standpoint, both in monetary and fiscal stimulus, looking forward for the rest of 2019 into 2020.
The wild card out there, though, is certainly trade policy. Is it going to be the end of 2019? Is this going to be kicked down through the election?
Absolute wild card. I don't know. It's a coin toss. You can never tell what's going to happen. The talk right now is that we may not get a phase 1 deal done per se as far as the actual, agreement between the 2 countries. But it looks like potentially that the December 15th tariffs are not going to happen. That will placate the markets as well. So if as long as we don't get that December 15th 15% increase in tariffs with Chinese goods, I think that will help the market going forward as well.
All right, looking for some deals, value on a global basis.
Yeah, value, we've got at least a semblance of value doing better again. It actually started on September 4th when President Trump announced that the trade negotiations were back on the docket. They were being resumed again. And since then, value has done well relative to growth. For value to continue to do well, though, ironically, you need growth. When there's a dearth of growth, people buy growth stocks. When growth is more abundant, they look for values. And so we do need growth both in GDP and obviously in earnings for value to perpetuate a little bit more so this rally that we've seen as of late with value-based investing.
All right, let's wrap it up with volatility. Certainly December 2019 looks different than 2018. Do you expect it to potentially be elevated in 2020?
Yeah, excuse me, you would think that volatility would continue to increase because we've seen very low levels both on the VIX and the SKU index, which is another measurement of volatility. And we think with the geopolitical risk that we're seeing on a worldwide basis, inclusive of the trade talks right now, volatility seems to be relatively low. One of the reasons is that people, when they sell options, they're getting income. With the dearth of income that you see on a worldwide basis, there's a natural tendency for people to want to sell options to get that income. Hopefully, for us anyways, that changes in 2020 and that income is not going to be the driver of what's happening to marketplaces, markets in general. It's going to be, once again, valuation and fundamentals that drive the markets in 2020.
All right, Mike, we'll be catching up with you for then, sure. Thank you so much for joining us at Market Site. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.